This is your Wall Street wake-up call. 156,000 jobs were created in September, missing estimates of 168,000. Joining me now on set is Nick Kolas, the chief market strategist at Convergex. And Nick, below estimates, but still a solid number for September.
It absolutely is. We're looking for a little bit more out of this report, but this is good enough to make folks continue to believe the economy continues to expand, job growth is still there, and we are still creating employment.
And we saw the labor force participation rate inch higher, which of course led to the unemployment rate rising from 4.9% to 5%. That's actually good news because it means people are sort of coming back into the workforce.
That's right. We've had so many people leave the workforce since the Great Recession and worry that they couldn't get a job or worry they didn't have skills to match the current needs of employers. And now we see them coming back into the workforce, and that's definitely good news.
All right, now the Federal Reserve has another meeting in just about a month. Perhaps this report wasn't strong enough for them to go then, but certainly it fits the bill for a December rate hike.
Absolutely. This is just bad enough that no one's going to worry about a November rate increase. And the markets are expecting one in December. And this does fit the general paradigm of an economy strong enough to raise rates again.
And you said before we went on that this was sort of the perfect jobs report for the markets.
It absolutely is. Markets were just a little bit worried that November could be a live meeting. Now that's safely off the table. In December, which we all expected, will be the meeting where the Fed raises rates.
Now, the reason we're sort of in a different time right now is we have this election coming up, obviously, and the markets usually parse these jobs reports in terms of what does it mean for the Fed's next rate hike. But my question is, will the markets parse these reports based on which presidential candidate does this report help? In other words, does it help Hillary Clinton, who is viewed as a safer option for the markets?
Yeah, I think this will definitely help the Hillary Clinton camp because it does show the economy continuing to grow at a slow and stable rate. And her message has been and will be, why do you want to derail the current path of progress when the numbers are still pretty good as these have been?
Although Trump would sort of spin this as, hey, why be happy over 150,000 jobs a month when maybe he could get even higher?
Absolutely right. So I think both camps will see something from this data that they like, but the markets are looking for a Clinton victory because it does continue current policies, which they understand, and this does fit that bill.
All right, in terms of your outlook for the rest of the year, obviously we're at the start of the fourth quarter. Where do you see opportunities right now?
For the moment, it's going to be very much a trader's market because we are going to have a lot of uncertainty and volatility around the election. So there'll be buying opportunities there. We don't see equities really going up a whole lot more from here because of the uncertainties over rates and the election, but there will be a lot of opportunities over the fourth quarter to make some money on a trading basis for sure.
All right, Nick Kolas, we'll leave it there from Convergex. Thank you for coming back. Great to see you.
Thank you.
I'm Scott Gamm, and you're watching The Street.